What's up, everybody? Welcome to the Stocks channel. On Friday, the stock market gave a warning shot that echoed through the market that could be telling us more high volume selling is right around the corner. First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So Friday, SPY was down 0.6% with a very bearish looking candle. And this is definitely a warning we will want to pay attention to, and I'm going to talk about why this is such a big warning we need to focus on. So I really want you to focus on all of the analysis and not just any one stock or any one sector, because we really need the big picture here. Now, one thing I want to remind you is that I actually trade a lot of the things that I teach and a lot of the things that I talk about. And on Friday, we did very well in the Discord server because I told you this was a stock pickers market, which meant that some stocks could be going higher while other stocks are going lower. And I told you bears and bulls alike are going to do very well in this market as long as they're focused on the correct stocks. That means a bear can be shorting one stock making money while a bull is going long another stock and making money. And that's why I use that term, it's a stock pickers market. However, if this entire index starts to roll over and signals that a top is in, it is very unlikely that we're still going to have that. It is likely going to be a bearish market across the board. And that's why I'm telling you Friday's price action was a warning shot that should be respected across the entire market. Now, just to show you that I'm not just full of crap and not just telling you these things without actually proving it, here is my year to date on my trading account, and you can see very clearly that I'm up nearly 26% year to date, and I did close Friday at a brand new all-time high. And the way I was able to close Friday at a brand new all-time high, even though we had high volume selling in the markets, is because I was focusing going long on stocks like Apple and Google, and those did very well on Friday. And then I was also telling you in the Discord server to look at shorting the semiconductors because stocks like Nvidia and other semiconductors were a little too far overextended and at least needed to pull back in the short term. So we had a very solid week of trading by simply going with that stock pickers mentality that we could be long stocks like Apple and Google and still have a proper hedge by shorting the semiconductors ETF. Now, this doesn't mean this trend has to continue to work. There are reasons to believe that Apple and Google could simply just be dead cat bounces and continue lower. And there's also no reason to say that the semiconductors can't continue to go higher after a deep pullback. But there will be things I want you to focus on with today's analysis. And keep in mind, I'm not scaring you. I am somebody out there trading the market, and here's the proof. And I'm not going to tell you something without putting money behind it myself. So the first thing I want you to pay attention to is that when we look at SPY, we definitely have a very bearish looking candle, but that is not enough to say that the market has topped and we definitely have to go lower. But we can increase our odds by looking at other stocks in the market. And the number one thing I want you to focus on here is Costco had a very high volume selling day. And as you can see from this hot dog stock, we had a very large hot dog candle on Friday. So if you know anything about Costco, this is a consumer sentiment stock, which means if Costco is not having great numbers, that could be a warning sign that people do start to panic about and start to pull money out of the market. So this is a huge concern simply because we had a huge high volume slice through all of the moving averages. The candle gapped down and closed at the low of the day with no wick. So the sellers were extremely motivated to get out of this stock, and you can tell by the huge volume that we had on Friday. So Costco is definitely a warning sign I would pay attention to. And then the other one is the fan favorite Nvidia stock. Had an extremely high volume selling day with a very bearish engulfing candle. And even though it did still close above the 5 EMA, when you get a huge red candlestick like this on a market moving name like Nvidia, even if we do start to bounce, it is very likely just going to be chop and a lower high before we continue lower, which means even in the short term, if we do start to bounce, we're looking for lower highs and then a push down towards this gap fill at 823. So when you have stocks like Costco breaking down and market moving names like Nvidia giving very bearish engulfing candles, that is definitely something you want to take caution of. That's why I tell you it was the warning shot echo across the market, because the indices and some market moving names are all giving us very solid warning signals. So the first thing I'm going to tell you as a trader is I'm going into the weekend with a very heavy cash position because there's no reason I should be heavily long or heavily short. I don't want to be heavily short while we still have a bull trend and we just pulled back to support. And I definitely don't want to be heavily long if we just put in the top and we're just about to see high volume panic selling. So this is a reminder that cash is a position, and sometimes cash is the best position, because that's going to allow me to go into next week with a very clear mind, an unbiased viewpoint of where the market should be going, and then I can watch the price action on Monday and start positioning myself in what I see as the next best trades. So if you're in the Discord server, that is what I suggested doing going into the weekend. And if you're in the Discord server, you better believe on Monday I'm going to be looking for more trading opportunities, whether those be long or short, or even whether we go long some stocks and short others. So again, that's what we're doing in the Discord server. That is how I trade, and that is what I'm teaching you to do by letting the price action do all the talking instead of guessing and not having a bias, so we couldn't care less if the market goes higher or lower. We are going to make money as traders whether the market's going down or up, as long as we're unbiased and listening to the chart. So looking at SPY, I just showed you many reasons to be cautious, and that's why I'm calling this the warning shot. And the warning shot doesn't have to mean the market top is in, but it's definitely something I'm going to be looking for. So on SPY, we need to hold this support right around the 5 EMA, which is 511, and then the support down here right around 507. If we break those two supports, we are very likely coming down to close this gap at 497. And if we bounce from those supports, it is still possible we do push higher to that new all-time high at 520. I'm more inclined to believe that this 517 price target and this resistance could have been the top for now, which simply means the top before a correction. I still think we're in a bull market this year, and I still think after a correction, we will continue to go higher. Obviously, that's speculation. We don't care. We're going to let the chart do all the talking, and this is definitely something we want to be paying attention to, and that is why we are so heavy cashed right now. On the NASDAQ 100 triple Qs, we were down 1.44% on Friday, and if you just skipped all of that SPY analysis, you really need to go back and watch it, because there's very important things I talked about that you do want to be paying attention to, and I'm not going to talk about them again. So on the triple Qs, it is just like SPY. It's possible we hit the high, and that was that level that I gave you up there at 448. And you can see we had a very solid rejection almost to the penny right at that level. And then we had a very bearish engulfing looking candle that did slice down and close down below the 5 EMA. So as you can see, that price target was very well respected because we did get high volume selling, and you can tell it was high volume selling because you can see the huge volume that we have down here below. So anytime we get high volume selling, even if we bounce, it's possible that's the lower high before we start to go lower. And that lower high could be the rejection that brings us down to the gap for that 425. So I am not one of those people who think you should be blindly buying this dip, and I talked about why during the SPY analysis. There's a lot of warning signs that say even if we bounce, it could be the lower high before more downside. So on the triple Qs, watch this support zone between 437 and 438, and if we break that, we will likely come down here towards this gap for that 425. If we make a new all-time high and we break 448, then we're likely going to 453. On the Dow Jones, we were down 0.12%, and you could see the Dow Jones rejected from this downtrending resistance trend line almost to the penny, which means we could have the next lower high before this thing really starts to break down, and that could take it down into the 380s. That 380 support will be that rising 50 EMA, and yes, we could go lower if we slice through that support, and that is also going to require the break of this support zone between 385 and 386. Now, this is not the case if we come out here and break this high above 391, but I would much rather see that high break to confirm we're going to 400 rather than assume this is still a powerful bull trend. If this was a powerful bull trend, the bull should have had no trouble breaking through that resistance on Friday, and as you can see, there was a high volume rejection. On the Russell 2000 IWM ETF, we were flat on Friday, only going down 0.06%, but we did come down here and close the gap at 206 and find support at the rising 5 EMA. Now, I do like this personally because I'm in the camp that the small caps do not have to follow the rest of the market. Last year, the small caps did not participate in the bull trend, and they just consolidated, which could have been a very large accumulation before they start to attempt to make a new all-time high this year. There are reasons to believe why that could be the case, and I'm not going to talk about it for too long, but one, we are getting a technical bull breakout from the top of that range, and two, there is reason to believe that rates could start to come down, which would ease a lot of downward pressure on small caps because they are very sensitive to high rates, and low rates would favor a bull run in the small caps. So regardless, we need to get risk off if we break down below 200 and then down below 196, but we can stay risk on as long as we're above this support and price actions above all the moving averages within a bull trend. If we continue higher, the next price target is up there at 214, and a solid risk level to use will be this rising 20 daily moving average right around 203. On the ARKK ETF, we were up 1% on Friday, so once more, the small cap growth names could continue to do well even if we get a pullback in the mega caps, and you're going to see that in IWM and ARKK first. ARKK simply needs to hold above 50, and if it breaks down below 50, it needs to hold this neckline of support right around 47 to 48. If that support fails without a new high, this is a double top rejection, and it means we're coming down to 44. And if we get the break of the high above 52, then we're looking for that next target higher at 54.5. On the VIX, we were up 2% on Friday, and the VIX did try to break out above 15, so we're definitely seeing a little more fear, but we're not going to get that high volume panic selling fear unless the VIX gets out here above 18. Remember, it's still a bull market, and in a bull market, we could put in higher lows and higher highs. But as I said before, you do have reasons to be cautious here and wait for more confirmation that we didn't see a top. On Bitcoin, we're currently trading just below 70,000, and it does look like we continue to push up against that all-time high right around 69,000, which means if we do continue higher, we should make that brand new all-time high price target just below 75,000. But as you can see, we did get that very high volume rejection, so I do think this is a low volume bull trap. And I know a lot of you think I'm going to be incorrect on my Bitcoin analysis, but if you knew my track record and you go back multiple years of me covering Bitcoin, you would see that I was very successful calling tops and bottoms, and I am still calling this a top in Bitcoin. A top simply means that we're going to get a very deep correction from here, and I do not believe it's worth the risk unless you have a very solid risk-reward ratio and you know how to manage your risk if we start to see high volume panic selling. So I still think Bitcoin is going to come crashing back down towards at least 52,000, but you can stay bullish as long as we can hold this breakout at 67,000, and above that we could see that price target at 75,000 before the deep correction and pullback. On Nvidia stock, we were down 5.55% on Friday, and I did talk about this during the SPY analysis, is how this is a concern for the market as a whole because this is the market moving name since last year, and this is a very bearish engulfing candle with a very high volume rejection. So as I said during the SPY analysis, even if we start to bounce off of this support, it could be a lower high before we come down to at least fill that gap at 823. So solid support to watch on Monday will be 870, and if we break 870, we're likely going to 823, and if we break 823, we're likely coming back down towards 740. If we continue higher, we need to break that price target at 933, and I did tell you 933 would likely be a very important top, and while we did break above it intraday, you can see we still got the high volume rejection around that level as expected. So we did get the actual rejection right around 970, but I do not believe we'll see any daily closing prices above 933 until we come down here and see a deeper correction. On Tesla stock, we were down 1.85% on Friday, and Tesla did fail the test that the bulls needed, which was the break above 183, and I told you below 183 we need to remain risk off, and that is still the case. Below 183 we could get this lower high rejection, a simple dead cat bounce before we come down to the bottom of the channel right around 160. We can get a lot more bullish above 183, but currently we're below 183, so we need to stay risk off and look for lower prices, and above 183 we have a lower high rejection possible right around 187. On Apple stock, we were up 1.02% on Friday, and I did tell you many times this was likely going to lead to a dead cat bounce in Apple, which simply meant that even if we bounced, it was likely going to be a lower high before the next lower low. And you can see a lot of the gains on Friday were given back because at one point, Apple was almost about to close the gap above 173, and it closed down below 171. So that was the dead cat bounce. There's no reason Apple has to go higher, but if it does go higher, look for the full gap close, and if we can break above that gap, we have another gap close up here at 177. Remember, this is a bear trend, so we're not getting overly bullish, and this was the dead cat bounce, so we could still go lower towards 167 to 163. So jumping back over to the S&P 500, as I've said many times during this episode, cash is king right now until we get more clarity on what's going to happen because I don't have strong conviction in heavy shorts or heavy longs. This could be a bear trap before another all-time high, or this could be the top and we're about to see more high volume selling on Monday. Having the flexibility to stay in cash and act according to the price action as we see it is the way to play this. That's what we're doing in the Discord server, so if you want to come join us and trade with me, then you need to join the Stocks Channel Discord server, which you can find out how to join in the link in the description of this video. You'll get access to all of my intraday updates and technical analysis and all of my trade ideas. And as you've seen in the introduction, we are absolutely crushing this market. The indices are only up about 7% and we are currently up over 25%, and that is incredible performance, and that's why being in cash here is king because we don't need to give back any of that money until we see what the market wants to do, and then we can place a higher probability trade on what we want to do next. So we're going to continue to crush the market this year. As I've said many times, this is going to be a great trading year. So if you want to come trade with us, come join the Discord server, which you can find out how to join below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.